When you're trading options, Fidelity has just what you need with straightforward but powerful tools to help you select a strategy and execute your ideas. And they offer a wide range of information and insights to help simplify your trading experience. Have a question? Ask it live during their small classes and coaching sessions. Need information? Check out their educational videos, articles, and webinars. See why it's easy to trade options your way at Fidelity. Start now at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risks. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of Characteristics and Risks of Standardized Options. Supporting documentation for any claims, if applicable, will be furnished upon request. 30 days has September, April, June, and November. Today's the 28th of May, which means the 31st is Friday, which means we're at the last week of the month of May. June is busting out all over. That starts on Saturday. MRKT Call. By the way, Rangers play tonight. How are you? Oh, you know who doesn't play tonight? The Indiana Pacers. Got swept. I mean, look, the Celtics are probably the best team in NBA, without question. But the Pacers did not acquit themselves particularly well in this series. I'm not a hater. They should have won the first game, and they somehow let that go. And I think they were up 15 in game 3, and they somehow lost that. Nobody cares, I understand, but I just thought I'd bring it up.
Not a lot of heart there, Guy, but I do think it's interesting that it's looking very likely that the Mavs and the Stars will both be in the finals here of their respective leagues. So that's kind of interesting and good on you guys on there in Dallas. I know, don't count the money. I mean, I got a wife that hails from Dallas, so I'm happy for them. I'd like to see the Celtics win, and I'd like to see the Rangers get to the Stanley Cup playoffs. All right, Guy, or the finals. Lot going on here, man. Like, month end, we're 2/3 through Q2. I think that if you and I have been taking a little stock of what we heard. I mean, there's some earnings this week, so maybe we'll hit some of that too. But, it seems like a lot of things are lining up for the Bulls here, and it's feeling a little euphoric in certain pockets. And then in other pockets of the market, it's feeling downright miserable. We'll hit all that, won't we? Today?
Yeah, we will. No, listen, certainly through the lens of the Nasdaq without question, but then you juxtapose it with a couple other things. And again, nobody cares about the Dow either in terms of the Pacers. Throw the Dow in there as well. And maybe the transports aren't as important in 2024 as they were maybe in 1924. But with that said, I mean, you have these basically polarizing forces, one pulling one way in the form of the Nasdaq and the other pulling the other way in the form of the Dow and maybe the transports. But the market wants to focus on a couple different things. So let's throw our rundown up and see what we're focusing on today, because Nvidia keeps chugging along. I think analysts are now tripping over themselves to raise their price target. It's interesting. Doug Cass put out a note, and he was basically talking about some of the same things that you've mentioned, that I've mentioned. A lot of people have mentioned the potential for double and triple ordering, the fact that the market now seems to think that semis are no longer cyclical as they've been basically as long as there have been semiconductors. Somehow there's this sea change going on, and somehow they're going to be able to maintain their margins. I saw a note, I think over the weekend, maybe it was yesterday, about even if their margins were to come down to 60%, that's still extraordinarily robust for that sector. So, we'll see. Another S&P price target update. I think this is in the form of UBS, Dan. An irrelevant inversion indicator. Is it irrelevant? We'll discuss.
Yeah, well, you've been bringing it up. You actually had a great conversation last Monday on the tape, Guy, with Elizabeth Young. That would be EY from SoFi. And you guys were debating whether or not it matters anymore. She's been tracking some data about the longest inversion in a very long time. And what does it mean? Let's start with the semis here. One of the things, Guy, I think is interesting is that, okay, listen, I have not been bearish on the technology and what's going on in the excitement around generative AI and some of these initial use cases. What I've been bearish on is the thing that you just brought up. At some point, it's as good as it gets. Clearly, right now, that's not the case. We talked about the long consolidation. Maybe Jacob can pull up a chart right here for the back half of 2023 that we saw in Nvidia. I think it was between like $400 and $500. And when it broke out on a beat and raise, and maybe you can go out a couple, make it a 2-year chart, but we had a similar sort of consolidation, despite the fact, Guy, there was a 20% sell-off, from the March, April highs, right? So look at that long consolidation that we had, and then that huge ramp, right? That was $1 trillion in market cap. We had another consolidation, and now we have another massive breakout. And I guess my only concern is that there's so much. I mean, like you and I mentioned this on Fast Money last week, we have never seen something to this magnitude. We're on like $1.2 trillion, right? In a little less than a year. We're up maybe $2 trillion in 2.5 years or so. And there's so much enthusiasm wrapped up in this one stock that I do think when you talk about market structure, you talk about passive investing all the time, that has the potential to be a huge monkey wrench if and when there is a pullback and that sort of thing. So I just bring that up because it's unlike anything that you and I have ever seen in our very long careers.
No, without question. I mean, listen, yes, and it's a great company. It's an important company. They've taken, obviously, not only the investing community, but I think people that have basically never bought or sold a stock in their life. And people are talking about this particular company about being groundbreaking and probably the most important company, most important technology in terms of what they're doing with their chips next to electric. You've heard all the accolades, right?
Yep.
But then look at the technicals. I mean, just go back to basically this time or month or so earlier, 2023, when you had that huge gap higher on the back of earnings. Now, what people don't remember is, I mean, that was when the stock had a $375 handle, and Jacob's pulling the cursor up, you could see it right there. That gap was unbelievable at the time. Now you don't even look at it. It's sort of a blip in terms of what we've done. Now you go and look at what we've done over the last couple of weeks, and you've created more gaps to the upside, which, look, historically is scary and somewhat daunting. And as Carter will tell you, gaps are made to be filled. And the fact that there's some $600, $700 lower in the shares is concerning. I'm not suggesting it goes there in a month or 2 months, but that's something I have to take into consideration. But the underlying reasons, why could that happen? And they're for fundamental reasons, because competition will be coming. Margins will, by definition, compress. And nobody seemingly wants to talk about the potential for multiple triple orderings that have inevitably have gone on here and historically have gone on in the sector.
Yeah, and those are all great points. And I just mentioned this, and you didn't even mention customer concentration, right? So you have Microsoft, Meta, Amazon, Alphabet that make up 40% of their sales. And at some point, their models are going to get to a point, you know what I mean, where they don't need to keep buying all those high-end GPUs. Our friend Gene Munster has mentioned this fact that there's this potential for a slowdown in the H100 as they move to this Blackwell, chip. And, who knows what happens there. Again, trying to short this thing has been a fool's errand.
Yes,
I think you and I have just
100%.
kind of brought up the fact that, again, sooner or later, there's going to be something that is not going to be that palatable. If the stock were to go, where's that 200-day moving average back there for any reason? You know what I mean? You're just, near $600, and we're approaching $1,200. There could be a 40-50% retracement in the stock. And one last thing. You saw that XAI, right? That's Elon Musk's AI company, just raised $6 billion. They're talking about buying 100,000, high-end GPUs, predominantly, obviously, from from Jensen Huang and Nvidia. I don't know if you noticed this. Jensen Huang has been talking up, which is kind of convenient in a way, Tesla and all their, everything that they're doing there. I saw recently, a conversation. So this is all a really campy sort of thing. So you're going to have XAI get in that, and they're going to be probably the 5th largest buyer of this thing. So again, I have not been bullish on this stock, not because of the technology or the company. I just think that it poses a big market risk, Guy. I mean, that's my sort of 2 cents there. But again, it's dragging up AMD. Taiwan Semi is making today new all-time highs. ARM Holdings is up nearly 10% or so. I just want to bring up one last point here, guys. So if I look out to June 28th, right now it is May 28th. Is that correct? Right? So exactly 1 month. If I pull up the options chain for June 28th weeklies, I basically get an at the money straddle. That is the call premium plus the put premium. right? If you bought that, the two of those combined are about $110, maybe a little more, okay? 112, 113. That is basically saying between now and June 28th close, the option market is suggesting the stock can move 10% in either direction. I don't know about you. The stock's up 7% today. I think the XAI stuff, the 10-for-1 stock split, the increased enthusiasm, 10% seems really cheap. So, like, think about it this way. Let's just say it's $55 for the at-the-money call. It's $55 for the at-the-money put. If you wanted to define your risk and buy the call because you think the stock's going to go well above, let's say the stock's at 1140, add $55, that's the call premium to that, you get 1195, right? If you think the stock could be above 1195 on June 28th expiration, meaningfully above it, it's not a bad risk reward. You're risking 5% or so of the stock price. So that's the way I think about implied moves. That's how I think about what the options market is pricing. And right now, given I don't know when let me get where the X date is for this thing. You know what I mean? For the split guy, I think it's in late June. Yeah, it's actually June 28th on the close. Maybe it runs into that. I don't know. I'm not suggesting buying that, but that's how I think about implied movement and using the options to kind of price this stuff out.
Makes sense. And that's why they are extraordinarily powerful when you understand how to use them without question. And, there are ways to use them using leverage, which people view as a bad word. It's not, especially through the lens of what we're doing. And obviously you can make directional plays with them, or you could use them sort of as insurance policies against portfolio individual stocks.
Yep.
That said, quickly, there was a 5-year auction a few minutes ago that the bond market didn't seem to particularly like. The equity market's not doing a hell of a lot on the back of that. I think the S&P is basically, maybe down 2 handles since that. But, very quietly, and we tease that we're going to talk about yields, 10-year yields back about 4.5%. With that said, we also talked about UBS raising their price target to 5,600. And this is Jonathan Golub. And he comes on Fast Money from time to time. Again, somebody that does very thoughtful work. I think now him and Brian Belsky have the highest price targets on the street. He was, I think, around 4,800 or so, Jonathan Golub, at the beginning of the year. He's obviously raised that up. So we'll see. I mean, again, as we approach June, people that find themselves, I don't want to say off sides, but, rethinking their year-end predictions, it's interesting, but Carter will tell you that it's a difficult game. It is, I don't want to call it a fool's errand because obviously a lot of very smart people do it, but it's not I don't think it's a particularly helpful thing to go through, right? Process.
Yeah. It's interesting that you mentioned, well, look at that right there, the S&P 500. Like, that consolidation guy over the last week and a half or so, what is that, like 8 or so trading days there? It's above the prior high from April. We had a 6% peak to trough decline. We know that every year on average, we get at least a 10% peak to trough decline from a relative high. We didn't get it there, right? And you look at that consolidation and you say, that's making a nice little flag, right? And as we get into quarter end, I think at the end of this week, by the way, there's an MSCI rebalancing. Sometimes you see some funky price action in and around that. But again, if we continue to see consumer confidence, there was data out there. We continue this morning that was better than expected. We continue to see housing prices that are better than expected. It doesn't just say bullish. It says that people, the wealth effect is in full effect, right? Those people who own homes and own stocks are going to be more confident, right, about things going on. We also have unemployment at 60-year lows, right? So it's just kind of interesting to me that there seems to be, with a VIX below 13, I know it closed below 12 last week, there just doesn't seem to be any fear about anything. And I think the Nvidia, just the continuation of the rally from late last week, just kind of shows you that too. But my only concern, Guy, is that we continue to get increasingly concentrated. When you have increased concentration, you say it all the time, passive is great until it goes active when there's some reason to sell.
If we put up that consumer confidence slide, you'll see. And what I find, again, fascinating about this is, you can see the numbers. It's a pretty staggering beat in terms of what was expected and what we got. But, then you say to yourself, well, wait a second. If that's the case, and again, I can't speak to the formation or the, who the underlying is in terms of who does these polls and stuff. But what I'll tell you is consumer confidence says one thing clearly, And you juxtapose that with the approval ratings on the economy for this administration, and it tells an entirely different story. And by the way, that's a consumer confidence number with people thinking inflation is going to remain pesky and persistent, which again is really interesting. And Carl Keatoney, and I don't know if Jacob can find it, he had a tweet earlier this morning. I think he was quoting Anthony Pasquarelli from Goldman Sachs, talking about the balance sheets of the U.S. consumer. And, they're better than people are giving them credit for. And maybe that's manifesting himself in this consumer confidence report. But man, oh man, the cross currents in terms of what's the economy, what's the stock market, how do people feel? I mean, it's one day to another. I mean, it's very difficult to get a read on where things truly are.
Yeah. And listen, we say this a lot, right? We're not, your hedge fund manager, your investment advisor, we don't really make recommendations. We do analysis. We watch this stuff all day long. We kind of draw on some of our experience and try to bring up some things that might cause you to kind of challenge some of your long felt beliefs. Okay, there's that tweet from Carl Quintanilla. You just call him CQ
or Q.
Or Q. I want to mention this. A reader, a watcher, a viewer, a listener who's sent me some really smart stuff over the years. A guy named Walter Todd just emailed me. He's the president CIO at Greenwood Capital. That's down there in South Carolina, guy. He said, this is interesting. He's not telling you anything you don't know already, but $500 billion in market cap in 3 days with this move in Nvidia, now 70% bigger than the entire energy sector of the S&P 500. Think about that. So the market cap of this one company, right, which ultimately, to your point, will have competition, will have margin compression, will have a transition. Doug Cass has put this out on Real Money, and you just referenced this. At some point, right, there is going to be some concern about oversupply, about you know what I mean, like inventory concerns, that sort of thing. Because at some point, all those companies that we just mentioned that have been the customer concentration, they're going to slow down their buying. They're going to get to a point where all these models just need to be in the inference stage, that sort of thing. So if it's just XAI, which is late to the game, it's just not enough. So I just bring that up because that's a really good
and look, and it's again, the monetization of AI is something that is yet to really be fully explained. And I understand the technology, but companies have to think about the amount of money companies are spending on it, right? So they obviously have to think there's a monetization on the back end of it, which is yet to really be fully, I think, discussed or thought out or hashed out. But again, we'll see how it look. Everybody's excited right now, and that's a great thing. But be careful, folks, because I think think about what you just said, $500 billion over 3 or 4 trading days. How many companies out there? Maybe 16. That's a guess. Jacob can look it up. But how many companies have a market cap north of $500 billion in the first place? It's not that many, and we seemingly talk about these moves like they're inconsequential or they're meaningless. I mean, it's significant. Anyway, Elliott's taking a $2.5 billion stake in Texan. Throw that up. And you and I were talking about this before the show. Yep. When was the last time you saw, again, an activist? And we brought it up. It was Jana Partners, I think. I went back and looked in 2015 and Qualcomm. So this is interesting. I don't really necessarily understand it. I guess, they're concerned about how they're utilizing their balance sheet. It's not like Texas Instruments has traded all that poorly. I mean, obviously, it probably has lagged over the last couple of years. It's been going to sideways or so when a lot of these names have been on fire. But, I mean, the move in this stock, even from, I want to say, early 2020 until current prices, has been, significant. Again, sideways action for the better part of the last couple of years, but still a stock that's probably approaching its all-time high.
Yeah, it's interesting, Guy. I just did this in Perplexity. So this is this Gen AI, they call it an answer engine. I use it a lot. So this is how useful this stuff can be. Just by the way, I just put a prompt in and I said, what are Elliott Management's largest activist stakes over the last 10 years? And these guys have been around for a very long time. This is Paul Singer. And so obviously this one's a big one, 2.5 billion. Johnson Controls this year, 1 billion. Anglo American, a name near and dear to your heart, 1 billion. Salesforce in 2023, Guy, forgot about that one. Okay. Pinterest in 2022.
That I remember, and we talked about it at the time.
PayPal in 2022. So it's interesting. There's no constant theme. I think they also did some semi stuff, maybe 7-8 years ago. But I think it's interesting. They really pick companies, right, where they see opportunities, and usually they get things right. So this is kind of interesting. So, Guy, when I look at Texan and I look at the customer concentration, 7% is Apple, Aero Electronics, their contract manufacturer, nearly 7%, Tokyo Electron. So they don't have this huge customer concentration. They're really more in industrial, right? Autos and the like here. So interesting story, but that breakout is pretty epic. And it's also one that you've highlighted on many times on Fast Money and on Market Call over the last few years, has oddly traded at a big premium on a multiple basis to many of the other semis there. So interesting stuff with not a tremendous amount of high growth built into the stock.
And real quick, if Jacob, this is a static chart. If you put up a longer, like a 5-year chart, you'll see sort of that sideways action that I was referring to. I mean, this stock had a huge run from 2020 into, I want to say 2022. Yeah. And then for the last couple of years, I mean, this has effectively been going sideways. So as Jacob pulls that up, I mean, you'll see exactly what I'm talking about. But, on a chart, it does look, you're finally breaking out of this consolidation period, which I guess is encouraging.
Yeah, no doubt. Let's hit this yield curve story, because I think this is interesting, and this debate, you know what I mean? Like, we seem to be, and this goes back to like the Nvidia conversation, like things that we haven't seen in a very long time, or possibly in our like professional lifetimes. And this used to be a thing, right, Guy? What's that saying about the inverted yield curve is predicted? 10 of the last 7 years?
Right. No, I understand.
Right. I know it's a little glib, right? But it's one of those things where, again, it used to mean something, it means less so. And I think it's not too different than what you just highlighted about, inflation, right? You know what I mean? Like, listen, I keep hearing this, Guy, and I don't know what this means to you, but if you look at industrialized nations, that we have the lowest rate of inflation. It's still high, and it's much higher than it was pre-pandemic, right? We were below 2%. Now we're, slightly above 3%, and the powers that be are hoping it gets back down to 2%, right? But like, there's a lot of that sort of both sidesism that's going on here, right? You know what I mean? Where, we have certain levels of growth that, I mean, listen, growth expectations have come down a lot. We've used that term stagflation. That's why I think you're kind of stuck on this. I don't mean stuck in a bad way, but like, you want to continue to bring up this inversion issue because it is the longest period of time we've ever seen it in decades.
Yeah. And I think it was in February. I think when we got through February, it surpassed the period of time, I think from 78 until 1980, or right around there, if I'm not mistaken. And with each passing day, obviously we build on that record. And, Liz and I did talk about this, I guess, last week when we brought up the fact that nobody seems to care about it anymore. And it's interesting. Again, I'm not suggesting a Wall Street Journal list. That's not my point, but they're obviously coming around to the same thing. Hey, wait a second. This is still out there. And for whatever reason, people are looking past it. And I guess, you get to a certain point where nothing's happening. So you figure, okay, this is inconsequential. I'll move on to something else. But it doesn't mean it's gone away. It's just sort of still out there lurking. And again, I'm not an economist. I say it all the time, but this will have meaning at a certain point. Yeah. And I do think when it does steepen, and it will steepen, it's going to steepen in the form of, again, just my opinion, 10-year yields going higher, not 2-year yields going lower. I think 2-year yields are sort of anchored. And quite frankly, if we see a similar GDP print as the last time, I think that 2-year yield will start to sift its way back down. But I think it's the 10-year yields that people should be concerned about. And I've said that for a while.
Yeah, you have. There's a great chart in that article in the Wall Street Journal. If you want to go to news articles mentioning both inverted yield curve and recession, look at what's gone on, like in 2024, and I get it. 2020, 2019, that's when 2019 is when the yield curve just started to invert, right? Right before the pandemic. And then I guess, I don't know what happened in 2021. But then again, in 23, in 22 and 23, we were in a bear market in 22, 23. There was a lot of skepticism, right, about that economic recovery and what the stock market was saying, but it's kind of fallen off a cliff here. Let's look at that 10-year that you think could rally. It is in a, if you just draw the mental lines here, Guy, you see a pretty well-defined uptrend, right? You see the 10-year treasury yield, held that 200
since February.
Yeah. And again, if you were to draw a channel and this thing were to take out those recent highs from April, the top of that channel, Guy, would be about 5%, which would be that high that we saw from last year.
And yes, you're right. And you're going to, we're going to have that channel there. I mean, that's basically it. I mean, really, if you really want to get down to brass tacks, there are other ways to draw this, but that's fair enough. I mean, we traded down to, I look at this and we traded down to the moving average and bounced in terms of yields. Yields traded lower. They traded down there. It was a one-day event basically, and we've bounced. I still think that yields are in an uptrend, or TLT is in a downtrend, and I'll stand by that. And I don't think people, again, are paying enough attention to it. And as we see more and more auctions the remainder of this year, I don't think they're going to be particularly robust. And we haven't talked about what's going on in Japan. Again, that's something that people seemingly putting on the back burner very quietly. Dollar yen's going back up to 157. I think it'll take out 160. That's in the face, by the way, of their 10-year yields either side of 1%, which doesn't sound like a big deal until you think about, the fact that, I think they're talking about a 17-year high or so in that. So there are a lot of things to be concerned about, and there are a lot of reasons to believe that yields will continue to go higher. The flip side of that coin is if the economy weakens in a meaningful way, obviously that's going to anchor yields. And I think that's why you're seeing this sort of push me, pull you stuff going on right now.
Yeah, so I'm looking at the options chain, Guy, and the TLT. Okay, so let's say we have the TLT at $90.30. Okay, $90.30, and I look at, let's just do the June 28th again, because it's exactly 1 month from now. It's also quarter end, right? If I look at the 90 call, okay, the 90 call is offered at about 140. It's already 30 cents in the money, right? Okay, so you're in the money. Think about that. That is like 1.23%, you know what I mean? Like that you would get to the upside. Okay, that's your break even if you thought that yields were going to go lower. Okay, on the flip side of that, the 90 put is offered at like 95 cents. Okay, so that's slightly out of the money. That gets you about 1.5% or a little more or so. But that break even at 95 cents is 89.05. The options market is giving you, I think, dollar cheap ways to express a view over the next month or two, in yields. And to me, I see what you see, that well-defined downtrend in the TLT, which is opposite of the well-defined uptrend that's in place in the 10-year yield. What do you think about using options to express a view, a defined risk view? Do they seem dollar cheap to you also?
It makes sense. It makes a lot of sense to me in terms of the way you just outlined it. And I do think, again, I think the premiums seem to be relatively inexpensive given what's going on and given some of the moves that we've had. So I think that's the right way to trade it. And again, it gives you some leverage and it gives you some duration. And I think things are going to start to happen faster than the market, I want to believe, is ready for. So this downtrend in the TLT, I still think it's in place. Again, are we going to get back to those October lows of the TLT, which again represents 5%? Yeah, I do think we're going to get there. And I do think we're going to get there, if I'm really going out on a limb, by the middle to the end of this summer. And I think it's just surprise people. I don't think the market's prepared for it.
This is one that you flagged, T-Mobile US to acquire most of US Cellular in $4.4 billion deal. Look at this chart.
All-time high today, I believe.
Yeah, but look at the long consolidation that it's been in. And so when you see that sort of price reaction, right, when investors are basically saying this company, which basically has far less debt than Verizon and AT&T. Like they think this is a good use of capital. Now, that being said, $195 billion market cap, they do have $15 billion in debt. So a $300 billion enterprise value. But if you're getting these assets that you think at a cheap price, right? Like that sort of thing, that's why you're seeing that sort of reaction. Why does this stick out to you? Oftentimes we know that AT&T and Verizon have much higher dividend yields than T-Mobile, 1.5% or so. So they use their capital to buy spectrum or buy assets like this, and the other guys are just financing their debt right now.
Well, I mean, if Jacob can do this, that would be great. But if you could overlay a T-Mobile chart over the last, let's call it 6 or 7 years, and put a Verizon and an AT&T chart up at the same time, and you're talking about dividend yields. The reason why, and I know most people understand this, but the reason why AT&T and the Verizon's dividend is as robust as it is because the stock keeps going lower. So the lower the stock goes, the higher the dividend yield is. That just becomes math. And those companies, I don't want to say are failing because that's not fair, but in terms of the stock performance, I mean, clearly failing. And that's a pretty good indication as to what I'm talking about. I mean, I think the green, if I'm not mistaken, is what, Verizon. I think the orange is AT&T. And obviously, I think what T-Mobile comes in on the white side of things. So you can see it for yourself. I mean, it's just, this speaks for itself in terms of the outperformance of T-Mobile and the underperformance of the other two. And I think that's going to continue here. I mean, it's just, T-Mobile's just a better, listen, it was a far more nimble, interesting company under the leadership of John Ledger. He passed the baton over, and I think current management is doing as good, if not a better job as this company matures. So, I mean, that just speaks to, sometimes they say a picture's worth 1,000 words. Well, there you go, Dan.
Well, and by the way, why do we bring up debt levels? I mean, so AT&T has $123 billion market cap, $150 billion in debt, Guy, and Verizon has $165 billion market cap and $175
because of
billion.
all and think about all the shitty acquisitions they made, right? And a lot of the write-downs and look, who knows what's going to happen with US Cellular? I mean, I can't speak intelligently about how they're going to integrate it, but I'll say this. T-Mobile's been just a much better operator over the last decade or so, as opposed to those other two.
Yeah. Hey, really quickly, I wanted to hit this. This is not in our rundown, but some of these, you've been talking about Freeport-McMoRan, FCX. You see it's having a day here. Alcoa is up 4%. US Steel up, 2% or something like that. Energy sector doing okay. Is this factoring a little bit into some of your inflation fears a little bit, or like the potential for kind of a stagflationary environment? Because again, those names stick out to me at different periods. And, the other thing I got to tell you that's massively inflationary, and a lot of people are not talking about this, but if there's so much demand for chips, you know what I mean, all over the place, this is really inflationary too, because you're talking about, well, the energy aspect of that too, right? But if you think about it, if every industry is going to start kind of implementing some sort of generative AI, they may not be buying the chips, but if there's more demand for these models, let's say you're an industrial company or a transport company or, a smaller internet company, you're going to rent that compute from a hyperscaler, Google Cloud, from Amazon AWS, from Microsoft Azure, that sort of thing. I mean, all that's really inflationary, right? And we did see by some of these enterprise software companies that had billings that were lower than expected. Workday, maybe he can pull up Workday really quickly. They were talking about, a transfer in spend. They're seeing some pressure on enterprise budgets as some of these companies are spending more on generative AI licensing or hyperscaler sort of access. Look at that 2-day chart. Oh my goodness.
That is, well, over the last couple of days, yes, but the longer term, you'll see exactly what you're talking about. It's again, there's so many different narratives here in terms of if you're bullish or if you're bearish, right? I mean, if you're bullish, everything's great. The spend, the CapEx with the names like Facebook and, that all plays to this whole semi resurgence without question. The flip side of that coin is, to your point, there's another side of the equation, and that is, the CapEx is, they're paying the money they're paying, it's going to get passed on to somebody, right? So it is somewhat inflationary without question. And they're going to be winners and losers here as well. But to answer your original question, and if you put up a Freeport-McMoRan chart, I mean, this stock had a huge run, sold off, back on its horse again. And that 100% plays into some of my inflation concerns without question. I mean, we talk about gold all the time. Gold is not an industrial metal. Gold is a commodity. Gold is a commodity in name only, but copper is a commodity in basically, if you think about it, by definition. And so if you look what's going on there, if you look what's going on with some of the soft commodities, some of the other industrial metals, I mean, they're all moving lower left, upper right before our very eyes. And I do think that makes the inflation problem, it's not going to mitigate anytime soon, in my opinion.
Yeah, and you just brought up energy consumption. We've been talking a little bit about utilities. The XLU in the last month, Guy, is up 15%. This is not the sort of move that you would generally see, especially in an environment where we've seen interest rates, the 10-year yield, back above 4.5% or so. So this is clearly one of those situations where rising semi and generative AI tides are lifting many different boats here. I think that's really interesting. The last thing I wanted to say about semis, and I want to get your 2 cents on this, is that if semis and generative AI chips, right, we know that Taiwan semi makes up like 85% of them, and predominantly in Taiwan and in China. If that's going to be an increasingly, you know what I mean, like you made this point on many occasions. Well, if it's going to be a hotspot geopolitically, and we know that we have lots of bans on the sales of a lot of these chips to the Chinese, the reshoring of manufacturing to the US or other places is also pretty inflationary.
And it doesn't happen. You know this. I mean, yes, it's very inflationary, and it doesn't happen overnight. And a lot of companies are obviously, you're seeing some of the spend. Intel's the top of the list, but that obviously hasn't helped that stock. But yeah, that's inflationary. And again, the China-Taiwan rhetoric continues. Nobody seems to care about that. By the way, Nvidia, I think it was a year or so ago when they talked about some of the existential risks to their company, China-Taiwan was at the top of their list. Again, market doesn't seem to care, but that's Taiwan semi. Do a longer-term chart, and you'll see where we've been and where we are now. I mean, this has just been a great mover, and we're through those prior highs. So, you know, we'll see. Do we do a back and fill? I mean, we'll see. The same way that I thought the SMH would do a back and fill, and it looked like it was going to happen in the middle of April. Obviously, that's not happening anytime soon, but I still think those prior all-time highs of 165 at some point are going to be visited. And I don't know what it's going to be on the back of, but stay tuned for that, sports fans.
Yeah. And by the way, we hit a bunch of option stuff today. We like to kind of give you guys a sense of how we are looking at markets, how we're looking to express views in that markets. Guy, you made a great point of the idea of just kind of, you know, buying calls or puts as, you know, leverage. But oftentimes it's really a matter of risk management too, as long as you're not littering your portfolio with a bunch of, you know, options that just are decaying and going to zero. But I just wanted to mention this, that options, trading options, Guy, might be new for you, or maybe you've been doing it for a while. Either way, Fidelity is your go-to source for clear and relevant information about trading options. For example, ask Fidelity professionals questions during their live small classes and coaching sessions, and learn more with educational videos, articles, and webinars. Plus, with Fidelity's straightforward tools and technology, you'll find it easier than ever to trade options your way. So see what's waiting for you at fidelity.com/options. Options tradings entail significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of Characteristics and Risks of Standardized Options. Supporting documentation for any claims, if applicable, will be furnished upon request, Guy.
Well done. Well done. And we got some cool things going on here. I think folks know we started it last Monday. Let's take a look at it now. Mrkt Matrix, which is our generative, did I say that correctly? Generative AI product, drops daily after the market close. I think last week on Nvidia's day, I believe we dropped it at around 420 to incorporate their earnings release. But basically, after the close each day, you'll get this in your inbox. Why wouldn't you?
Why? Well, here's the thing, Guy. It's actually a pretty tricky thing. It's not generative AI. It's AI generated. And let me tell you why. Because it's not like, you know, our bot is creating the stories and it continues to kind of, you know what I mean? Like, you know, build out a narrative. We are using generative AI to help us construct this podcast. So what we're doing is Guy and I and our team are curating a bunch of stories throughout the day that we think are most important to us. We are putting it into Perplexity, okay, which I just mentioned before, and it's giving us a nice summary via text of those stories. We overlook them, we make sure they're accurate, and then we put it into an AI voice bot, which actually voices. What's the name of our friend?
I believe it's Brunson Burner.
It's just Brunson. It's just Brunson. And he's reading the stories, and we're doing all of that in less than 10 minutes. And let me tell you something, people. If you are like me and you speed up your podcast, Guy, I know you're a 1.25 guy. I'm more of a 1.5 guy. You're getting this thing done in like 5 or 6 minutes. And when you leave listening to this podcast, okay, Guy, you are going to know what the heck happened in the markets that day.
I think you know what? It's very helpful. To your point, depending on the speed, it's anywhere from 5 to 8 minutes. Maybe on certain days a little bit longer, a little bit shorter, but you're going to get what you need to know in the late afternoon. And I think it's extraordinarily helpful. And the feedback we've gotten has been great. And if you want to leave some feedback, not only can you do that, but you get a pretty badass T-shirt. Check this out, Dan. I mean, look at this.
It is pretty cool.
Usually we say, okay, so somebody changed it, because it used to say leave a 5-star review, and I would make fun of that. Now they just say leave a review, which is better, because you shouldn't tell people what review to leave.
Yeah.
My opinion. I don't know.
I got you. Listen, Guy, we have a great community of listeners and viewers at Risk Reversal Media, and we appreciate you guys very much. And you know what? I think without the incentive of that cool T-shirt or some hats or some water bottles, which we've done over time, you guys would go and leave those very nice reviews. But we want you guys to be repping. That's what the kids say, Guy. We want them to be repping our stuff. So we're happy to send the swag. Okay. So leave the review, screenshot it, send the screenshot to contact@riskreversal.com, leave your size, your mailing address, and you're going to get one of those tricked out shirts. We really appreciate it. You guys ask us all the time what you can do for us. Well, you can help us in leaving reviews for our podcast. That would be Mrkt Call, it would be Mrkt Matrix, it would be On the Tape, it would be OK Computer, but this one is specifically for Mrkt Matrix.
And we appreciate that. And we talked about some trades. If you want your trades in your inbox, you can do that as well. Check this out. Sign up today, riskreversal.com. And we are all over social media. Check out this slide. We're all, look at that. I mean, 2, 4, 6, 8 different ways to find us.
Yeah. How about that? All right. We covered a lot of ground, Guy Adami. I really enjoyed this. I think I got smarter just listening to you. How's that?
Well, doubtful. But as I mentioned, so it's 1:40. So in approximately a little over 6 hours, the New York Rangers will be playing in not Miami, Florida. I believe it's Sunrise, Florida, game 4 in a series that they're now leading 2-1. They got home ice advantage back by virtue of the fact that they won on Sunday. The Yankees lost in San Diego, but you can't win every game in baseball, as you know. That coincided with a bullshit Met win that gets them to a robust 22-30, which, if my math is correct, Dan, is 8 games under 500. So that's problematic, but we'll see. Anyway, hockey's still in full force. You mentioned the Stars of Dallas now up 2-1 against the Oilers of Edmonton. And we'll see how this all plays out.
Yeah, I'm excited for this Ranger game tonight, and then coming back to on Thursday, Madison Square Garden. That is a matter of fact sort of situation. I just got offered a ticket, one of those suites. You ever been on one of those suites all the way up there, Guy? It's kind of high to watch a game.
And again,
not your jam.
Not my thing.
There's like 30 or 40 people in them. So
and my sense is, out of the 30 or 40 people in there, I don't want to talk to 30 or 40 of the people in there. Like, I just want to go and watch the game. I just want to go and watch the game.
I know you do, but my buddy Brad, who invited me, I've been to.
I'm sure he's a
diehard. There's a lot of diehard fans in there, so it's a lot of fun. But again, thank you guys for all being here. Guy and I are going to be back tomorrow. I think with Carter Braxton Worth. That would be absolutely amazing. So we'll be back on a Wednesday with Carter.
See you later.
Thanks, everyone.
Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risks. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of Characteristics and Risks of Standardized Options. Supporting documentation for any claims, if applicable, will be furnished upon request. Fidelity Investments and Risk Reversal are not affiliated. Views, opinions, products, services, and strategies discussed are not endorsed or promoted by Fidelity Investments. Fidelity Brokerage Services, LLC, member NYSE, SIPC.